Almost done with October. Hard to believe, but true. Let's dig in. We got some great stuff today. Government shutdown still going on, but for the most part, rates have still been improving. So remember, this instance, right, in these mortgage-backed security graphs, going up means lower home interest rates. So again, you can see we're about as good as we've been for the last 3 months. So you see we've hit these levels and we're kind of backing off them. Tomorrow's going to be a big deal because the CPI, with the government shutdown, there hadn't been a lot of data, but the CPI, this inflation number, comes out tomorrow. And even if it's innocent, it could just, the market could just be wound up, ready to break through. So whether you go up or down, to be determined. But you can kind of see we've got the best rates we've seen, and they've kind of been moving sideways for the most part for the last, call it 7 weeks, give or take. Yes, they went up a little bit and then came down. But I do want to show that this is 6.18 according to Mortgage News Daily. And again, let's call it low sixes. We're seeing some rates in the fives as well, depending on the program and what you're doing. But I want to rewind 2 years. So this is that same graph I showed you. If you go back 2 years, you can see that rates were this good and technically just a touch better this time last year in September. So September, we thought we were going on a run and things were going lower, and then all of a sudden they reversed course and came back higher. Not great is what it is. So I just want to point out that while it's close to being some of the best rates we've seen in 2 years, we can't just assume rates are going to keep coming down. Time will tell. I hope and believe and think they can and should, but I have some forecasting here that show you that may suggest otherwise. Some interesting stats real quick for September. Essentially what it's basically saying is the median home price, and median does not mean the average. It just means the one in the middle. So like if 10 homes sold, whatever, let's say 9 homes sold, number five is going to be the median. So whatever number five sold for, if there's four lower in price, four higher, that's the median. So it's not the average, but the median home price is up 2% year over year. Just means some bigger homes maybe are starting to sell, in addition to the normal, first-time home buyer, lower price points. So at least some of them are starting to move. That's good. Inventory, this was surprising, is up 14% year over year. A lot more homes are sitting. I knew it was up. I didn't know it was up 14%. There's a 4.6 month supply. That's technically, you're still within a quote normal market, but it does mean that, again, things are obviously sitting a little longer, 33 days on the market. And let's see, it was 28 days a year ago. So it's up. Homes are sitting another, call it five days beyond what it was last year. Not the end of the world, but certainly indicates that things aren't moving quite as fast. Here's some other fun September stats. 21% of the homes in September sold for over list price or over ask. I thought that was interesting. That's 1 out of 5. And that's actually higher or in line. It's higher than last year's 20%. So it's still kind of in line as far as the number of homes. So I guess what I'm saying in that stat, what I like to see is that if the home's priced right and in the right area, there's still a real competitive market. The hard areas are going to be where there's a lot of extra, home builders have been building a lot or a lot of supply. That's no bueno. So we're going to show charts or maps of that here in a second. 30% home buyers are still paying cash. That's been pretty consistent for last year, give or take. 15% of the homes are bought by investors. That's actually a little lower than it was the previous month. Somewhat surprising because if rates come down, investors should be able to, pencil returns a little better, but it's basically in line with where it's been. Last year was 16%. Now it's 15%. Not the end of the world. I'd say that's probably the same. And then lastly, the first time buyers, 30%. That's actually up from not only last month, but last year. Last year was 26%. This year, right now in September, is 30%. So more and more first timers coming out. So some of that seems contradictory. If more first timers are coming out, we saw the median home price increase. That doesn't necessarily make sense, but again, it's the market and it is what it is. And maybe a lot of these first timers are in markets where it's just expensive to buy homes. ARMs, I heard a stat this morning. I didn't update the slide. ARMs now make up about 11% of mortgages, which is a bigger number. So you can see here in the middle, the third bullet, they jumped about 9.5%. I now think it's about 11% from what I saw. But basically, ARMs are becoming a real thing as rates go down, and people are looking for ways to help affordability. So in line of affordability, Zillow supposedly says that rates have to fall to 4.4 to restore quote unquote affordability. I don't know what defines affordability for them. I know they use these debt thresholds. I get that, but the reality is there's still other ways you can do it to where you don't have to have a 4.4 fixed rate. So again, the arms we just talked about could be one thing. But the reality is we know affordability is tough. And you guys can see here the affordability for where they think it needs to be is somewhere between 4.4 and 6.7. Good news, we just saw rates are below 6.7. So we're in that affordability range, which is good. And hopefully we'll stay there. These are the states that are having some foreclosure activity more than normal. The top 10, Texas is making the top 10. That's not ideal, is what it is. Florida, number one. But in Texas, one out of every 3,300 homes is hitting foreclosure. Delaware, shockingly, was number two. I don't know why that's shocking, but the Northeast, if you guys watch these on a regular basis, the Northeast is hot. So I'm surprised that there's anything up there with a lot of foreclosures, because typically that would tell me if it's hot and there's not a lot of buyers up there, or pardon me, a lot of sellers, you'd think home appreciation would help it to where somebody doesn't get foreclosed on, but who knows? So there you go. You can see all the states. In terms of canceling deals, I thought this was really interesting. I don't like the first stat. I mean, I get it. It's a fact that 56,000 contracts are being canceled in August, and that's the highest since 2017. There's just, again, there's more people and a lot of it is what it is. But technically the next stat, this is why I said I don't like that first one. It seems like a big number, and it is, but 15% of homes under contract fell through. What we've seen for the last year, we've been doing this for a year and a half, it's usually about 16%. So in other words, I don't see any massive change. And I know it says like, one in seven roughly here, and these say 14%, but I've seen stats say 16. So let's call it what it is. Somewhere between 14 and 16%. I don't see this as a wild upswing. I understand it's a good headline. It's a neat little chart, but I just don't see it as a wild um, swing in that sense. So why do buyers back out? So if that, 16%, 15% of people are backing out, home inspection and repair issues, 70% of the time. That makes sense to me, right? Again, if you don't want the house because their foundation's goofy, that makes total sense. So 70% of those folks are, in my mind, are justified for backing out. The buyer's financing fell through 27%. What this tells me, almost 30% of people are making dumb choices with a mortgage company. That's how I read that. That is wild to me. Shocking. That does not happen in the mortgage mark team. Again, if you're financing through and you got to back out of the contract, you picked the wrong lender. That's my personal opinion. That's my professional opinion. Buyer under structure and sell current home. I can see that, right? In this market, I get it, especially if you did new construction. You're like, oh, I'll sell my home and now it's here compared to 6 months ago. And wherever you're living, I can understand that. Change in buyer's financial situation, fine. Lost a job. And I got to be honest, I don't know what that stat usually is. So 15% kind of makes sense to me. Maybe somebody lost their job, or they're not getting reload, or something happens. I can see that being a normal amount. Found another property they like better. Again, I think that's reasonable. If they found something like better, yeah, they're going to cancel and go buy the new one. So it's kind of a net zero to me. So I would not put that in this category as far as like, oh, you lost a lot of buyers. Concerns about the economic climate. I get it. That I suspect is higher. I don't know what the normal stat is, but I can understand in today's world, people are worried about the jobs and all this other stuff. I get that. Seller backed out could relate to the one right above it. They don't know where they're going because they could be buyers too. Low appraisal makes sense. What we saw some of those foreclosures, if it's in an area where there's a lot of new construction, or duress sales, or just a big inventory supply like in Florida, I can see where low appraisals might be a thing. Insurance too expensive, all that stuff. I put this back in that number about the financing. You should know your freaking numbers before you go out and do a contract. Like, know what you're doing. So before the contract falls through, homework and make sure you're getting the correct insurance numbers that you could be using for it. And then mortgage rates high. Man, that's just an excuse. The reality is, you know what mortgage rates are. You shouldn't even go under contract without that. So again, I think a lot of this says to me, these are just people making poor choices when it comes to getting a lender. The majority of these things I agree with, and they're probably not that unrealistic compared to a normal market. Okay. Falling mortgage rates aren't sparking home demand. I'll spend very little time on this. Stupid. The reality is there's another chart. I don't think I forgot to include it. I saw it literally this morning. Shows that the consumers, it takes a minute for them to go out there and, one, to realize rates have dropped, and then two, to start getting the idea that, hey, maybe we can go buy a home. So there's always going to be this lag. So yes, rates have come down. You haven't seen a big spike in activity yet. But again, it's not just like rates drop and you're out there looking tomorrow. So it will come. Lower rates will spark some interest. It's coming. And then markets where the home prices are falling, Dallas Fort Worth, unfortunately, making this bottom of the list. There we are, negative 3.8. It is what it is. We got a lot of inventory here with builders. I know you go to the outskirts. We got builder relationships in Salina and on the outskirts, and there are a lot of homes out there. So yes, I understand why Texas and Florida could be having some pain here because of all the extra inventory. Government shutdown. So far, no impact on, I think we're on day 23. I suspect it'll start this accelerate and get fixed in the near future. The good news is the majority of our loans don't have any major impact because of it. So that's the good news. And then I mentioned earlier in this about the projections rates. They're not projected, this being Deloitte and Touche, to where, supposedly they don't see rates changing for the next 4 to 5 years, more of the same. So they think rates are just going to sit here in this low to mid six range. So look, if they do low to mid six, not a big, look, would I prefer them to be lower? Sure, why not? But the reality is that's still a good, like we saw in the chart up above, that's still in the affordability range. It is what it is. It just means that we got to work through whatever nerves people have not buy homes. We just got to work through the existing inventory in some of these areas where there's a lot of them. And 15 cities see the steepest home price drops. Dallas, we're not in those 15 cities, but we're just outside of it. This report says prices are off about 6%. So I don't know who to believe, Zillow or the one before, that basically said we were down 4.8, maybe this one's 6. Let's just use round numbers. Dallas is down about 5% in price. I still don't see this being a big bubble. I think just right now, builders are probably a huge, not probably, are a huge piece of that because they're giving away a ton of incentives for folks to get out there and buy them where they've overbuilt. Rent, I gotta be honest, I probably meant to take this one out. It just is what it is. I don't find it that interesting, but there you go. Product of the week, when 3 grand beats 7,600. And the reason why I did this, if you want to read it, and I think you should, it just shows that we are doing refinances, like in this instance, putting somebody in a 20-year note where they're paying an extra 250 a month higher than what they're paying today, but it saves them $7,600 a year in interest. So yes, $250 a month equates to $7,600 in savings. That's good math. That's mortgage math right there. And then lastly, the Jewel Heist. A lot of folks probably heard of it. I've been reading about it. It's like the Thomas Crown Affair, that movie back in the day. $100 million worth of jewels were stolen. But what it blows my mind is if they get caught from this DNA in the helmet and the gloves they left behind. Oh my God, if you're going to go rob the Louvre, do not leave your gloves and helmet. Like that's just like burglary 101. Um, Scanning stuff. This one's interesting. Some TV producer got scammed out of 100 grand and now made a best-selling book and podcast out of it. So good for him. Lemons to lemonade. And lastly, honey, I will do anything for you. Let's go look at homes before we get pre-approved. And then he, kicks her off the ledge. A little morbid, little blue, still funny, proves the point. And kudos to the team, as always. Thank you for doing a great job. Thank you for the Google review. We appreciate it. Homestyle renovations, we crush it on renovations. And you know what to do. I know it's longer, but this is really good data today, and I had to share it. So thanks for sticking around. It's been a long one, I get that. Hope you have a great day, and we will see you next week.